heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Live from New York, this is Bloomberg Technology. Coming up, Intel shares rise as CEO Pat Gelsinger leaves the company after a failed turnaround effort. Plus, Tesla and BYD ramp up discounts and incentives in China in a final push to meet annual sales targets. And Tenstorrent nabs a $2.6 billion valuation after backing from Jeff Bezos and Samsung. We sit down with its CEO and chip design legend, Jim Keller, later this hour. But first, let's get you a check on the markets. We dive straight there. We are up more than 3% on the back of the news that Intel CEO Pat Gelsinger is leaving the company. It is indeed going to be two interim CEOs that take the helm for the time being. CFO David Zinsner, Michelle Johnston-Haltos going to be serving as the interim leaders as the board searches for a replacement. This after, of course, his departure is potentially signaling more strategic shifts at the business. The investor base claps it slightly, but we get into the details with Mandeep Singh of Bloomberg Intelligence. Look, many would say they're surprised. Many would say, look, the August numbers that came from Intel just showed that this turnaround, this restructuring was going to be so painful, and the board has lost confidence.
Yeah, and look, I think it probably suggests that the numbers for 4Q don't look very good either. So clearly, the gross margin going down, and the foundry business was a big contributor to that, because even though, Intel has about $18 billion of foundry revenue, it's negative gross margins. And when you think about that $18 billion number, how much of that business comes from the outside? Like, they don't have any big customers like TSMC does, when it comes to the foundry business. It's mostly internal when you think about that $18 billion number. So that's where, the question marks were raised around Intel's CapEx of around $25 billion, which is the major reason why they are, burning $15 billion a year. And I think Pat had about 4 years to decide on the fate of the foundry business. He actually wanted to acquire Power Semis. That didn't happen because of regulatory hurdles. So you have to ask yourself, was focusing on foundry business the right strategy? And the answer probably is not, given it hasn't turned around in the last 4 years.
And yet the US government is handing them a lot of money to build chips, to be the future of onshoring. How resilient does that look? How resilient does, trying to do both manufacturing and design look for the business?
Yeah, so you're absolutely right. The government wants them to succeed on the manufacturing side. The problem is the optics here. Why wouldn't Amazon or Microsoft or NVIDIA, for that matter, go to Intel Foundry when they know Intel is a competitor on the design side? And that's where, divesting that foundry business will actually make it, more palatable for competitors like Amazon and NVIDIA to use some portion of Intel's foundry, similar to what AMD did with Global Foundries. I mean, Global Foundry has a lot of business outside of AMD now, because it's an independent entity. So that's where the gross margin profile will still be a lot lower for the foundry business, but at least the core Intel business, which is how investors look at the sum of the parts of Intel, and they say the core client PC business is still where they dominate. I mean, look, the server side, they are a bleeding share to NVIDIA, but more than 50% of the revenue still comes from core PCs. And even though it's a saturated market, the AI wave will help spur a refresh cycle at some point. We don't know it's going to be first half or second half, but it will come.
And it will come under new leadership. Mandeep Singh,
Yeah.
We thank you so much on all things Intel. We'll have plenty more of that in a moment, but let's just talk a little bit more about the US focus on chips, because the Biden administration unveiled new restrictions on China's access to vital components for chips and artificial intelligence. Now, the Department of Commerce slapping additional curbs on the sale of high bandwidth memory and chip-making gear. It's impacting 27 types of chip design and fabrication tools. It's also blacklisted 140 more Chinese entities that it accused of acting on Beijing's behalf. Bloomberg's Mackenzie Hawkins had a busy Thanksgiving period reporting all this out, Mackenzie. And just go first and foremost as to whether this actually looked perhaps slightly better to the market than some had anticipated.
So this is what's become kind of the third annual update to these sweeping export controls that the Biden administration has levied on companies trying to sell chips and chip-making gear to China. But the latest controls, which were unveiled this morning, came in slightly softer than some proposals that officials had floated earlier this year. They didn't sanction a handful of key Chinese companies with ties to Huawei that they had discussed sanctioning, and they also exempted important allies, notably Japan and the Netherlands, which are home to two of the most important chip tool-making companies, from rules that restrict additional types of chip-making gear from being sent to China.
All of this context is the US trying to limit capabilities over in China, trying to home grow a supply chain here in the United States, which does involve Intel. Just going back to that story of the day, Mackenzie, how much do you think the US government is going to be upended by a change of leadership? How much has Intel benefited from the CHIPS Act, for example?
So Intel actually last week solidified a deal for $7.8 billion in funding from the CHIPS Act, which is this broader $52 billion program to bring chip manufacturing back to the United States. The company has said it's committed to its U.S. expansion plans, which include more than $100 billion in investment, $90 billion of which will come by the end of the decade, and plans to execute on factories in Arizona, Ohio, Oregon, and New Mexico. Gelsinger's departure shouldn't change the company's plans as we see it now. But of course, a new CEO will have to decide whether to pursue options that Gelsinger had left off the table. And the U.S. government will be watching that closely.
They will be. Mackenzie Hawkins, thanks for breaking it all down. Meanwhile, we want to get the whole circumference of the chip sector for you now with Pierre Ferragu from New Street Research. Your first take on the announcement of Pat Gelsinger retiring, were you surprised?
I was very surprised by the abrupt news, like retiring today with no transition period, so a difficult situation. We knew the board was tense since the summer. You remember Lip Tan, the CEO of Cadence, resigned from the board over the summer, and it was like reflecting like difficult conversations. And so it probably looks like Pat lost the confidence of the board, or didn't get the support of the board for his strategy anymore, and basically probably decided to leave abruptly. So that was a surprise. Now that we are 4 years into the turnaround, Pat's direction was let's double down on Intel's capabilities in manufacturing. Let's make Intel like a leading manufacturer. Let's go large. Go big, and leverage at the maximum the political support we'll have to do that. So that was the plan, and the plan failed basically because TSMC's model cannot be competed against. I think that's the view we've had from the beginning. So Intel being able to preserve manufacturing capabilities, yes. Intel being like a scalable, like a large-scale competitor to TSMC. Is probably not possible for like scale and experience reasons, and that's where things failed.
Yeah, in August, on that very bleak announcement of numbers that we had, and a disastrous sell-off in the shares, was this restructuring. It involved a lot of job losses, but it did involve also the sort of peeling away of the foundry business to be able to be managed sort of separately but alongside Intel. Does that stay, or do we start to see actual purchasing coming from, well, with the reports previously of Qualcomm being interested, even the chip designer ARM?
So the situation is going to be very, very fluid for quite some time, for sure. As you mentioned last summer, the board was said to be fighting off, activist shareholder, or at least getting prepared to fight off activist moves. The situation is, of course, very complex. So on one hand, Intel has manufacturing capabilities. Intel has manufacturing capabilities onshore and owned by like a US controlled company. So it's a very, very unique asset, extremely valuable in today's geopolitical context. And I think Intel needs to continue to be able to build on that. So of course there is a tempting route, which is to say, okay, maybe Qualcomm and Intel could merge, or Qualcomm could buy out Intel, or try and trigger a consolidation of that type. I don't see that as a good opportunity. It's very difficult to generate synergies between Qualcomm and Intel. The chips Qualcomm do are very different from the Intel chips. Manufacturing is a complex business. So I'm not super, that's an area that scares me more than anything else. Bad M&A decisions typically can arrive in a situation like that.
Yeah.
What's more interesting, I think, is to be like, okay, how can we make sure we create a sustainable US-owned, on US soil manufacturing capability? And if you do that, you have probably to admit that you're not going to compete with TSMC. You need to partner with TSMC.
Right.
Maybe you need to find other very large partners that are going to support you. And of course, the one that comes to mind that owes maybe to the US is NVIDIA. So, like intelligent partnering around manufacturing with TSMC as a partner, NVIDIA as a partner would be a much more interesting route to pursue from here.
There is ongoing breaking news around this story, and Bloomberg leading the charge with how Pat Gelsinger was indeed forced out after the board grew frustrated. The biggest frustration, Pierre, was that they missed the AI evolution, jumping on and being able to ensure that what they produced, which is Gaudi, was able to compete. I mean, they're likely to miss that $500 million target for this year when NVIDIA's busy making about $100 billion a year.
Yeah, I think it's the frustration came from the lack of prudence of the initial plan, going too big, too large, assuming demand would follow as long as you can pull together like quality supply. And yes, the underlying cause is that Intel ended up not being in the growing part of the market, and namely AI. It was last summer was particularly abrupt, like to see like the complete failure of Intel's AI chips and the fact that they would not be at all in the market. While AMD is actually carving out a fairly sustainable niche positioning in that market. So that was part of it. But I think Pat probably stuck too much to his initial plan with like a very ambitious, very large scale plan, and should have probably a year or 18 months ago thought about changing tack to smaller and more collaborative with other players in the market.
Because Pierre, I mean, much of this predated the Pat coming back in 2021. That course was already kind of paved, and he didn't reorientate quickly enough. Where now in terms of leadership and in terms of Intel's place in the ecosystem? Very quickly, please.
So I think Intel could be specialized in manufacturing in the US under US control and ownership, and collaborate with the rest of the industry instead of competing. I think then like smaller scale, remaining keeping a position at the leading edge and leveraging the products of Intel, like the PC chips and the server chips that are still very good and in very high demand.
Right. Pierre, thank you so much for lending your expertise today. Pierre Ferragu on New Street Research and all things Intel and chips. Meanwhile, sticking with the area of AI, shares of Supermicro absolutely soaring today. The company says that an external review of its business found no evidence of wrongdoing, and the company will appoint a new CFO. This follows, of course, that tumultuous year for Supermicro, which is also facing US DOJ probe following a report from short seller Hindenburg Research. This, of course, is a company that uses NVIDIA chips within its servers that it sells on to key clients. We're up 14% over the last 2 trading days. Meanwhile, coming up, we're going to break down the Black Friday sales data and trends for Cyber Monday. MikMak's Rachel Tipograph. Stick with us. This is Bloomberg Technology. Of course, today is Cyber Monday, and Adobe expects consumers will spend a record $13.2 billion, up 6% year on year. Online spending is expected to peak, especially between 8 and 10 p.m. later tonight, with $15.7 million spent every single minute. That's Eastern time, of course. Let's look at all of that and indeed what happened on Black Friday and the weekend. Rachel Tipograph with us, founder and CEO of MikMak. It's an e-commerce marketing platform for multi-channel brands. Feels like a big year. I'm certainly getting hit with a lot of marketing. Is it feeling that way for you, Rachel?
It is. Despite what's happening in the economy, consumers are showing up to really save. I want to say spend, but it's really about savings right now.
Okay, that's interesting. So it's more about the deal making. And how are companies managing to access those consumers right now? What innovative ways are they using to market across various platforms? Oh, do we have some technological issues? Rachel?
Absolutely. When we look at what happened from Hello, can you hear me? Hello?
Apologies. There's a big delay,
Hello,
Rachel.
hello?
Do carry on.
Hello? When you look at what happened between Thanksgiving and Sunday, the majority of traffic came from social. Meta being number one, TikTok being number two, and YouTube being number three. If we were looking at results from this year, YouTube wouldn't have made the top three. What's really clear right now is brands are recognizing that social is the third shelf. And wherever short video and creators are, that's where brands are investing their dollars and their time to gain mind share to then drive traffic to their Black Friday deals.
How, Rachel, are the companies that are doing well, the likes of Walmart we saw really stealing a lot of the market share and the targets, how are they tracking it? How are they making sure that they've got the measurements that proves that the investment's making sense for them?
Absolutely. I mean, if you look at Amazon's earnings or Walmart's earnings, it's very clear that these retailers are now becoming data businesses. They're making 80 to 90% margins on selling data as a service. And we all know they're not making those margins on selling physical goods. So when it comes to measurement, major brands are first relying on retailers' first-party data, but then they have to marry that to third-party sources because we can't all be grading our own homework. So they're turning to companies like MikMak, Adobe, Circana, which was the merger of IRI, NPD, to really validate what's happening. Between MikMak's data and Adobe's data, we're pretty much seeing the same thing. In MikMak, we've seen a 1% increase in conversion rates during the Black Friday weekend this year compared to last year. If you extrapolate that to what Adobe's seeing, Adobe saw an increase in $1 billion in revenue. That 1% increase in conversion rate marries that $1 billion increase in revenue. So by marrying multiple sources of truth, we can all start to see the picture that consumers showed up, they were really choosy with their dollars, and they turned to places like Walmart because that's where the value is, and that's also where breadth of merchandise is this holiday season.
One-stop shop is what people are liking. Rachel Tipograph, we thank you so much for the expertise, CEO of MikMak. Meanwhile, coming up, it's the end-of-year rush for EV makers who are turning to China to meet their annual sales targets. That's next. This is Bloomberg Technology. Time now for Talking Tech. First up, 5 Canadian news media publishers. They've sued OpenAI for breaching copyright, alleging the company scrapes content to train its AI products. According to an OpenAI spokesperson, its models are trained on, quote, publicly available data grounded in fair use. Plus, Elon Musk has asked a federal court to block OpenAI from pursuing an illegal, quote, conversion to a for-profit business. In his latest court filing, Musk repeated earlier claims that OpenAI broke its promise to him and abandoned its founding purpose as a charity when it accepted backing from Microsoft back in 2019. And NVIDIA CEO Jensen Huang is set to meet the Thai Prime Minister on Tuesday. The two are expected to discuss investment plans and cooperation within the Thai government. The meeting comes after NVIDIA announced a build-out of AI data centers and manufacturing in Thailand back in October. Now, sticking with all things Asia, and let's just talk about China and EV makers in particular. Tesla, BYD, we're getting data that they've unleashed even more discounts and incentives in China. This in a final push to meet annual sales targets. Let's break it down with Bloomberg's David Welch. And look, what are we getting on offer here in China?
Look, they've been fighting for market share all year long, and now everyone's trying to hit their sales goals as we get into the last month. Sort of reminds me when I looked at some of these deals as Toyota's December to Remember that they have every year in the US, but this is electric vehicles in China. So 0% plus rebates on some Tesla models. They'd already announced some discounts last week on, I think, the Model Y. And BYD's been doing this for a while. basically launching a price war to put pressure on their competitors, gain market share. BYD is one of the few EV makers in China, the Chinese makes that is, that even makes money. So it's going to put a lot of pressure on its domestic rivals. And then look, Tesla's trying to hang in there in a tough market for foreign automakers. So they want to keep the market share up, and they want to keep the cars moving too. So very good deals if you're looking for an EV in China right now, and you're seeing some of that in the U.S. as well.
In the US, maybe some very reasonably priced 0% loans that are going on if you want to be making purchases in EVs. There are new entrants as well within China. Xiaomi, for example, has made real inroads into the EV market. Tesla is dependent on China in many ways, and many wonder whether they're going to make their fourth quarter targets in terms of sales. How difficult is it to navigate China?
Very tough right now, especially if you're a foreign automaker, foreign to the Chinese market. The Europeans have had a tough time there, so has General Motors. Tesla is trying to really stay in the game, and they're having to discount. And one of the reasons you're seeing other car companies like General Motors and Volkswagen struggle is they're not as willing to discount and sell cars at a loss as the domestic producers are. And look, BYD is driving a lot of this because they're huge, they're profitable, they're trying to grow all over the world, they've got lower costs, so they're able to do it in a lot of ways. And you know, there's a bit of a Darwinian game playing out in China where the top domestic producers who can afford to discount are going to go for market share, go for overall size and scale, and push some of the others, whether they be American and German companies or even Tesla itself, or some of their own Chinese domestic competitors, push them out of business or into downsizing so they just dominate the market one day. They're already pretty big and they just want to be the player in the country.
David Welch with a pretty brutal outlook on EVs over in China. Thank you so much. Meanwhile, let's talk about one key car maker. Stellantis is left without clear leadership after a surprise departure from its CEO, Carlos Tevez, which was reported earlier by Bloomberg News. This comes at a time when Stellantis is under pressure to halt a sales slide in the US. It's also struggled with the European market, where demand for EVs is waning, just as we were just talking about Chinese manufacturers expand in the region. Remember, they are key when it comes to the likes of Fiat and Jeep. Coming up, one startup hopes to break NVIDIA's dominance with the heavyweight backers, including Jeff Bezos and Samsung. We speak with the CEO, Jim Keller. That's next. And before we go, a quick check in on Intel. It is the key news of the day that we have seen Pat Gelsinger step aside, announce his resignation, we understand, on the back of a frustrated board who couldn't really get behind his turnaround of the iconic chipmaker. We're up 7% as we have two new interim CEOs named for the time being, David Zinsner and Michelle Johnston-Holthaus. This is Bloomberg Technology. Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York. Let's get a quick check on these markets and look, let's focus in on what's happening when it comes to chips. The key story of the day, a 5% rise in Intel as the CEO, Pat Gelsinger, hired back in 2021 to turn around this iconic chip maker, will leave the job as that turnaround has thus far failed and he's lost the confidence of the board, according to Bloomberg reporting. NVIDIA is up 0.5%. Look, under his tenure since 2021 at Intel, Intel shares dropped 60%, NVIDIA's shares rose 800%. We shine a light on what's happening with the chip sector more broadly. We're up 2.5% on the stocks. And let's just shift gears a little bit, talk chips more broadly and how there's some new entrants into the AI part of the equation. Jeff Bezos, for example, and Samsung are betting big on AI chip startup Tenstorrent, announcing a $700 million investment, which puts the company now at a $2.6 billion valuation. Joining us to discuss is the CEO of the company, Jim Keller, who is himself a legend in chip-making world. Of course, your resume includes the who's who of AMD, Apple, Tesla, and indeed Intel. Jim, the money that you're raising, what is it that you're hoping to do? You're wanting to make a more cheaper operation, an option out there for AI accelerator chips.
Yeah, that's right. We're building out the team. We're building out our products. We're starting to ship our products, and our real mission right now is to bring on developers and early customers.
Let's talk about the customers and what you offer that isn't in the market at the moment, Jim. What's your selling point?
Well, we have a couple things. We license our IP, and we're building a business on that for both RISC-V CPU and AI. We're selling low-cost development systems. Like, I'm really interested in hitting a much lower cost point. And then we open sourced our whole AI compiler stack. And people like the transparency. They can see exactly what the technology is doing. Actually, it's turned into a great recruiting vehicle for software engineers.
Interesting. So let's just go first to the price point, just a cheaper offering. A lot of that's done by having less pricey components. For example, NVIDIA's chips are incredibly expensive, we know. People pay it because of what they offer, the full stack in many ways. But they struggle from a choke perspective on high bandwidth memory chips in particular. You don't need them. Why don't you need them? Why don't you want them?
Well, it's partly about choices. So there's two choices. One is if you pick a really expensive memory technology, you'll never get the price down, right? And so you need to then make technology decisions to lower your costs. So we have in a tensor processor architecture, we keep the data on chip more. We have a software stack that's very good at partitioning AI workloads across multiple chips. And then they can send information and compute packets to each other without having to go through memory. And that lowers the memory bandwidth required and also lets it scale more naturally across many chips.
So I'm a new investor. You brought me on board. I'm interested, Bezos, Samsung. But you're saying, look, I'm going to do this with more open architecture, with cheaper offerings. How much of the market share do you have to get? What sort of price point are we looking at for your chip offering?
Yeah, so this is really wild. The market is so big. Like, the percent we have to get is actually pretty small to be a real value proposition. You know, next year we'll die and go to heaven if we make $200 million. We've already booked $150 million in revenue. I'm really interested in finding small players, early players, people who want to own their technology. People are excited about our software and hardware architecture. And, you know, I want to grow organically from there. I think some people have focused on the big guys first. That's not how new technology introductions go. You focus on smaller players, people who need a differentiation. And that's that's our mission.
So what, therefore, is the mission building in terms of long-term value of generative AI, of AI applications? Do you think that we are in some sort of hype cycle? Do you think that actually this market is as big as many are factoring in?
Well, first of all, we are definitely in a hype cycle. There's going to be multiple. And people say, well, Jim, you don't understand. It's going to go down next year. And then it's going to go up and it's going to go down. Low pass filter, all that stuff, right? What's really going to happen is AI is going to dominate computing over the next 10 years. And we're just starting. And the hardware is going to change a lot. The software is going to change a lot. Like, one day you read in the papers, LLMs can do anything. And the next day you read, they've hit a limit. Ignore all that stuff. We're just starting this. There's going to be massive transformations. So what I really wanted Tenstorrent to have is great computer designers, general purpose CPUs, AI processors, chip design, system design, software design. And then the open source stuff is really interesting because that engages a community of people who are really passionate about that to contribute back.
This is where you're thinking about your own talent team. You've managed talent, as we said, sort of across the board. You began, you're integral to the chip design process in the US when you think back to DEC and then the work that you then did at AMD, moving to Apple. You were at Intel, and I just have to go there on this day that Pat Gelsinger hands his hat off. He's going to be resigning. Many would say it's because they didn't get into AI quickly enough. That was prior to him. What do you make of the transition?
Well, it's hard to say. So I like Pat personally. I've met him a number of times. He's a smart guy. He really cares. I think the market focuses too much on stuff like execution and AI transition. The way you make money, get customers, is build great products. Like, Steve Jobs was the best at this. Focus on the product, make the best product you possibly can. And I think they need somebody way more hands-on, really focus on product. And they need to stop talking about AI, execution, all the nonsense, right? When they make the best product, the best fab, the best chip, the best GPU accelerator, they'll do fine.
Jim, when you're thinking about all of the areas you want to own, how much does US and China factor into your growth story?
So first of all, we are building open source software, RISC-V based technology. We think that's an open platform. There's a lot of people interested in that. At the same time, there are restrictions by the U.S. government and trade rules. We have really good lawyers and trade compliance people. We work very closely with those guys. We want to do the right thing, both for the business and for being compliant to what's going on. And it's a changing world, and we're very involved in that. Short run, our business possibilities are really big, and if China plays in that, that'll be interesting. If it doesn't, for various reasons, that's fine.
Got a big valuation. Come back when you're executing on the latest round. Thank you, Jim Keller of Tenstorrent.
All right.
Great to have you. Meanwhile, Europe's most valuable startup, Helsing, has moved from software to hardware. A company that provided AI software for drones and jet fighters are now making weapons of its own, debuting a new attack drone. Bloomberg's Mark Bergen joins us for more. €5 billion value startup, and this is all about drones potentially to be used in terrain, for example, a Russia issue?
Correct. I mean, so there's a couple things. They have their AI software. Their main feature here is that they say they have built software that allows these drones to avoid GPS jamming. So a major problem in the war in Ukraine has been Russia's electronic warfare that has blocked GPS and effectively renders these drones kind of useless, right? And they say that we built these autonomous drones. They can get over this GPS issue. Now they're going to be shipping these new units. They're talking to Ukraine and other NATO allies. And the way the company describes it is they sort of see this as this border deterrent, not just in Ukraine, but across all the eastern flank of countries in Europe that border Russia.
Let's just talk a little bit about the startup itself. Pretty cagey around details of the technology and sales. They didn't want to give a demonstration, but who is backing them and who is buying from them?
So they've had some pretty prominent backers. The most early one was Daniel Ek, who invested, the Spotify founder, invested through his fund. They've received some pretty big investments from General Catalyst, the U.S. fund that's become much more active in Europe. So getting a mixture, I'd say, of European and American investors. They have had a deal with Saab to work on the Eurojet fighter. And they've also done some deals with Airbus and some drone manufacturers. What we haven't really seen is to our point in the story, a clear demonstration of the products. A lot of this has been sort of bespoke AI deals and kind of working on command and control software and making these weapons sort of more intelligent and more autonomous. This is the first time we're going to actually see something that they've produced potentially go into the battlefield. They have not shared anything about revenue or profits, but as we know, they've raised nearly $1 billion to date.
We'll see how the HX2 performs when we get that sort of detail and information. Bloomberg's Mark Bergen. It's a brilliant story. Thank you. Coming up, a look at how the fate of TikTok in the US could impact future investments in Chinese tech. Mitchell Green of Lead Edge Capital, he's joining us next. This is Bloomberg Technology. Let's get a check-in on these crypto markets for you at the moment, because look, maybe we've been tempering some of the phenomenal rally that we've seen in Bitcoin. We're not near the $100,000 mark quite. 96,000 where we trade. We're off by 1.7%. The whole of crypto seems to be partying in Miami this week. But I'm looking at Mara Holdings. We're down by 5.5%. New kid on the block announcing how much it's buying in terms of Bitcoin onto its balance sheet. This, of course, is a Bitcoin mining company. And MicroStrategy has been doing this for several years now. We know Michael Saylor has been plowing yet more money into Bitcoin in the last week, announcing that this morning as well. Let's do it all with Isabel Lee. I mean, Michael Saylor showed us how it's done. They own more than 30, maybe even $40 billion worth of Bitcoin on their balance sheet now. And Mara's joining.
It's $38 billion, and they're now announcing their fourth straight week of buying. It's just really astonishing. We have the likes of Cathie Wood really kind of rejoicing, sounds bad, but they're rejoicing, the Trump administration, because they know that this will mean good news for the coin. And as you can see, it really bolstered. Ever since Trump won, you can see the chart. It really was just a spike higher. And yes, we're struggling to hit the 100,000 mark, but we're inching ever closer there. It's around 96, 97. So that's really a positive news. And we have Trump saying on his first day he will fire SEC Chair Gary Gensler. No need for that, since Gensler said he will step down, but we have Paul Atkins, who served as Republican SEC commissioner, being considered, according to reports by Bloomberg. So it's really lots of tailwinds for this space. And now we have the establishment takeover of Bitcoin as well.
Yeah, I mean, so interesting how at one point Tesla was doing the same thing. Companies did have Bitcoin on the balance sheet, but really it was only MicroStrategy that stayed committed. Now we have Mara doing the same thing. What's interesting is we did hear from Cathie Wood praising a new regime under the administration. She's pretty long digital asset classes, but where else does she see positivity?
He sees a lot of positivity, not only in crypto, but also in fintech companies, in M&A, all of that. Really, all of the things that were clamped down under this administration. Remember, a lot of the CFTC also banned a lot of acquisitions in the tech space. So she just sees more loose regulations, softer regulations on the space. And when it comes to Bitcoin, it's not just Mara Holdings or even MicroStrategy acquiring Bitcoin, but the U.S. government potentially being a whale. There's a bill that, if it's passed, will require the Fed to sell some of their gold and buy Bitcoin. So that's good news for the space, but of course it will create risks like price volatility. In the run-up to that, gold price might sink, Bitcoin might rise, and of course whoever holds what will kind of suffer or celebrate. But there's really a lot of things happening in this space. But it's interesting because now a lot of companies own more Bitcoin than others.
Isabel Lee, all things crypto. We appreciate it. Look, crypto regulation is looming over lawmakers in Washington, but it's not the only tech policy facing uncertainty. Of course, the future of TikTok in the United States is also up in the air, as well as impacts of President-elect Trump's threats to impose sweeping tariffs, most significantly on Chinese goods. Mitchell Green's with us, founder and managing partner of Lead Edge Capital, key investor in ByteDance. You've been building up that investment in the secondary market, Mitchell. I just want to understand how much of a weight you think US-China is on it.
Thanks, Caroline, for having me. And how much weight do I think it is? So for us, we actually, in our base case, assume that the U.S. we have assumed that the U.S. business would actually not account for anything, and we thought it would be banned. What you see Trump saying looks like it may head another way. You know, what people say and do in Washington on both sides are two very different things. Who knows? You know, I think I can't imagine the first thing Donald Trump wants to do, though, is ban TikTok, especially when a lot of his big supporters, like an Elon Musk, who I think is, you know, probably at odds with Mark Zuckerberg, who would be the one to benefit off of a TikTok ban, or like a Joe Rogan, who's a huge supporter on TikTok. Like,
right.
Look, I think it's pretty positive for TikTok to have Trump in office.
Meanwhile, Mark Zuckerberg, we understand, has been dining with Trump over in Mar-a-Lago last week, so maybe new music changes there. But I'm interested more broadly on, just spell out TikTok and how integral it is to broader ByteDance investment choices of yours.
Yeah, so the Chinese business, it's been rumored and reported in the press that, you know, the North American version of TikTok is a single-digit percentage of the business. It is not a giant part of the business. I think it is a part of the business where a lot of investors or potential investors in it see a huge amount of opportunity. You know, I believe that TikTok is the biggest existential threat to a business like Facebook or Instagram inside Facebook or Snapchat. I mean, just go ask millennials in America what they use, or if your own kids, or just look at their usage patterns and look at the data around like daily active users and how much time is spent on all these different apps. And TikTok is a real player, but I can assure you, Mark Zuckerberg would love to have it banned. It would be great for his business.
But Mitchell, your expertise is so great on this show because you led or co-led some significant investments like ByteDance, but also like Alibaba. You're someone who understands the consumer of China, where technology is going there. How much harder has your life become to access these sorts of deals on secondary market, for example, to be long China investments?
It's not very popular at the moment, we'll put it that way. Although some of the greatest investors I know say if 99% of investors are if you want to know where public markets are doing, ask the 10 smartest hedge fund investors, and when all of them tell you when 9 of them tell you one thing and one tells you the other, do what the one does, and you'll probably make a lot of money. It is sure an out of consensus trade at the moment, buying China, but it is cheap. I mean, we can buy ByteDance, and we've been buying ByteDance at, sub 5 times earnings for a business, growing, much faster than Facebook. So we just think it's really cheap, and that the risk-adjusted reward is quite attractive. And in our base case model, we model the business at 0. Look, we might get lucky. Trump may not ban it.
Yeah.
He may, the Chinese economy may start to recover some. And on any stretch of the imagination, looking at public Chinese comps today in the internet space, if you look at Tencent or Alibaba or Ctrip, these things trade at, substantially higher multiples than 5 times earnings. So not only are we potentially going to get earnings growth, we're also going to get multiple expansion and when we exit. But I can't tell you when the company's going public, and I don't think nor can anybody else. But tailwinds, and whereas the U.S. political environment 6 months ago looked like it was going to be a huge headwind, it might become a tailwind. But time will tell.
Mitchell Green, founder, managing partner of Lead Edge Capital. We like people on with contrarian ideas. Thanks for joining. Meanwhile, coming up, a deep dive into LeBron James's media company, which lost $28 million in 2023. Lucas Shaw brings that story. This is Bloomberg Technology. Let's get to today's Screen Time newsletter. Bloomberg's Lucas Shaw writing over the weekend about how he's uncovered financial details about LeBron James's media company that reveal quite a bit about the current state of Hollywood. Lucas joins us now. You were pulled off the bench from sitting and consuming content and hanging out with family to write the newsletter because, 28 million being lost? This is a company that's valued, well, in the heyday, very high.
Yeah. Well, they benefited from the streaming boom that happened, right? You had all these companies that were making shows for Netflix and Amazon and Disney and others. And those in particular affiliated with famous people, Reese Witherspoon's company, LeBron James's company, raised money at valuations that really, in retrospect, made no sense. I mean, LeBron's company got a valuation of more than $700 million when its revenue was high 70 millions and it lost millions of dollars. And they ended up having to pay for it in the end because the market crashed a little bit and people are looking at these companies differently.
They're managing to, get lemonade out of lemons with a merger with Fullwell 73. Is that going to be lemonade? What does that deal look like?
Well, look, the deal does give them more scale. And I think that will benefit them at a time where these companies that they're competing with are giant cutting back. It also gives them some complementary expertises. The LeBron's company is very good at unscripted. Fullwell is also good at unscripted, but does more live events. LeBron's has a big branding company. I do think it's probably squishing together 2 challenge businesses to try to solve a problem. Sometimes that works, sometimes it doesn't.
I mean, you talk a lot about Maverick Carter, who's kind of the guy who's running the business on a daily basis, and he smart things around not building it within LeBron James, but sort of around, it's not all around LeBron. It's sort of like he's been the expert in the building. Meanwhile, everyone's trying to work out where content does work. Clearly, it's working in the theaters right now. I mean, Wicked and Gladiator. Oh, Moana 2 seems to be one everyone's excited about.
Yeah, huge weekend at the box office. I mean, Moana 2 setting records, the biggest animated or biggest Thanksgiving opening ever, one of the biggest animated openings ever. I believe the biggest opening of the year, close to $400 million worldwide. Is just insane. And then the good news for movie theaters, the good news for Hollywood is that you had 2 other movies out in Wicked and the sequel to Gladiator that people were very excited about. I mean, the stat that blew my mind was that 75% of showtimes this past weekend were for those 3 movies.
Wow. And it's kind of everyone's catered for in this scenario. Kids are catered for, male, women, no matter what you're...
All across demographics.
Yeah,
you've got
all in the
action,
cinema.
you've got singing, you've got a little bit of everything for everyone.
But the money being made, I mean, Gladiator and Wicked, I can't imagine particularly cheap to make. They have to make some money.
Yeah, Gladiator, very expensive. I think they have owned $250 million to produce. Some people say it's more. Wow. That's the one that will be the hardest to make money on because it's probably going to top out, 500, maybe 600 million worldwide. Wicked, I think, cost maybe 150, 175. It will make enough to make money, and then Moana is going to make a fortune for Disney.
and all the merch. I'm already getting hit with that. Bloomberg's Lucas Shaw. We love it. Thank you. That does it for this edition of Bloomberg Technology. Do not forget to check out our podcast. Find it on the terminal, as well as online on Apple, Spotify, and iHeart. This is Bloomberg.